Not many companies took to the financial markets in FY19. There were fewer public offerings than the past few years. But how well did the markets receive some of the new entrants? Considering the spate of IPOs that we have currently, it's important to look at the IPOs that have come out in 2019 or FY19 as well. Yash Upadhyaya has the scorecard. Yash, good morning.
Morning, Neeraj. So FY19 was one of the most dullest years for the primary markets, as concerns with respect to liquidity feared by the series of defaults by IL&FS, trade war concerns, higher crude oil prices and rupee volatility kept most of these participants away from the primary market. As a result of this, we only had 13 companies going public last year, which is the lowest number since FY15, when only 8 companies had come out with an IPO. In terms of the number of companies that came out with a positive return, we have 8 companies of those 13 which have given positive returns. Topping the list is Fine Organics, which has gained 68% from its issue price, along with the likes of HDFC, AMC, Aavas Financiers, all of whom have gained more than 40% since the date of listing, as well as rights issue, which has come in about 38% higher. The other key names to watch out for include the likes of Credit Access Grameen, Chalet Hotels, TCNS and Zelp Design, all of whom have gained anywhere between 6 to 27%. So 7 of those 8 have in fact managed to give higher returns than the Nifty as well in FY19. But moving on, let's also take a look at what are the factors and which are the top 3 outperformers in that space. We'll start first with Fine Organics. It's the largest oleochemical based additive manufacturer in the country, and one of the very few globally as well, with high entry barriers being one of the key positives for the company. The new product launches for its Zealandia joint venture, which caters to the bakery segment, that is a key positive, along with the fact that their volumes are likely to see a big growth going into the second half of FY20, following the expansion and ramp up of its operations at its Ambernath facility, which would increase its total capacity by as much as 46%. This is according to a brokerage report from Citi. Moving on, when it comes to HDFC AMC, it's the largest asset management company by AUM, with equity assets of more than 1.4 lakh crores as of February 19. It is the best positioned in terms of capturing the growth potential in the underpenetrated mutual fund industry in the country. It has had a strong execution record with consistent ROEs of over 40% and a wide distribution network being some of the key positives that continue to make brokerages remain bullish on the counter. Moving forward, let's also take a look at which are the key positives when it comes to Aavas Financiers. It is focused on the affordable housing segment in the rural and semi-urban spaces. So that offers a long growth runway for the company, along with the fact that it has managed to have strong asset quality over the last several quarters, as well as presence in less competitive segments. 92% of its revenues, they come from 4 states, and the company at the time of its IPO had mentioned that it would use the IPO proceeds for the expansion into newer geographies, which would again help bring in growth going forward as well.
Okay, Yash, what about the listings that did not do well?
Right. So we only had 5 listings which didn't really do well, the most recent one being that of MSTC. But let's also take a look at which are the other names which didn't do very well. Well, we start first with Garden Reach, down about 13.5%, along with Ircon International, down 15%. And the 2 big names that have fallen the most are Indostar Capital as well as Varroc Engineering, down anywhere between 29 to 39% since the date of listing. Let's take a look at which are the factors which are not working well for these names. Varroc Engineering has been a casualty of the slowdown in auto sales, be it both globally as well as domestically. In terms of globally, its clients such as Ford and Jaguar have seen issues when it comes to UK as well as China sales. It has a very high concentration of revenues from some of its top clients. Bajaj Auto accounts for almost 18% of its overall revenues, and 60% of its revenues comes from the top 5 clients alone. As a result of which, Citi in its recent brokerage report just about a month or so back had cut estimates by as much as 11 to 14% over FY19 to FY21. Moving forward, let's also take a look at which other factors not working very well for Indostar. While the AUM growth has slowed down on across the 9-month FY19 period, it has been on account of the slowing corporate book. Asset quality remains stable, but the stress in the SME book is something that analysts are keeping an eye out, as well as the fact that the higher share of the real estate portfolio, almost 30% of its overall AUM, does mean that smaller players like Indostar tend to get into trouble if there is huge crisis such as the one that we saw back in October with ILNFS. And lastly, when it comes to IRCON International, well, brokerages continue to remain bullish on the counter. Even till date, most of the brokerages, they have a buy rating as well as a higher target price. But the key reason for the IPO not doing very well is the fact that it managed to list at the time when the markets were at the peak, and we saw a big move from those levels on the lower side. And because of those weak market conditions, the IPO hasn't quite worked very well for the company.